guests in this room, you know?
Yeah, your setup is certainly cool. Right, I think that's all
God, we're getting
rolling.
wrecked right now.
Let us know. Good evening, friends, family. Probably no family, but friends, colleagues, viewers. Hope everyone's doing well. Flary Reuter, of course, comes in with the immediate audio video good. That was like suspiciously quick in terms of feedback, so I mean, I hope that's not some copy
They
paste message.
they know what you ask.
Yeah, true. I've become that predictable. But yeah, that's good to know. Well, welcome to Casual Friday. Joining me, of course, is my good friend, colleague, mentor, guru, therapist, Ledger Status. How are you doing, man? Thanks for jumping on this crazy, hectic week market, whatever you want to call it.
Yeah, I appreciate you having me. It's hectic is a great way to describe it. Hyper volatility is like really fun. Also, sometimes like gut wrenching. But it's hard to sleep. That's for sure.
That's for sure. Just when you think you're used to it, it comes back and reminds you that this time feels different. It also reminds me of 2017 to some extent, where sleep was associated with guilt almost, right? Because you'd have these positions, you're watching these setups, and then you kind of tell yourself you'll wake up and buy a dip or show some orders, whatever, and then by the time you're out of bed, it's already gone up like 50, 100%. It kind of feels like we're reaching those levels with regard to altcoins,
Yeah. Yeah. It's a conflicting situation. It's like I have an altcoin where it's like, oh, it went up 50% yesterday, and oh, it went up 75% at the top of today following that. And it's like, why I haven't even sold one of these. And it's like, well, it hadn't hit my target yet. It's like, well, it went up 125% in 2 days. So what am I supposed to do here? It's challenging. Like things just start to elevate straight to the target as people become bigger and bigger believers of like the outcome because they've seen the early runners, and that makes it challenges your initial thesis. If it's like, okay, well, here's resistance or here's the extension target, but then when it goes to like half of that in 48 hours, it's like, oh man, now what? Is it still the same target? Is it just going faster? Am I just going to win that easily, or like, am I an idiot for not taking profit? So you constantly question like, what's the right thing to do?
Yeah, it's one of the characteristics I feel like of a strongly trending market. Like as number go up, you kind of have to pull your targets higher away from price, and then if you're in a trend in the opposite direction, if the market's moving lower, you kind of just need to move your bids lower as well. It's one of those you kind of just want to get out of the way almost every single time.
Yeah.
Like you don't want to sell if it's going up, you don't want to buy if it's going down, but certainly it doesn't make anything particularly easy. I wanted to ask you because I mean, there's so much going on. I think a big part of what's difficult is finding what's important or sticking to something, or at least keeping like background narratives in the back of our mind. Like, where's the capital? Where's the big move? How do I position from a broader point of view? You can focus on the micro, like where's the most recent breakout? Where do I want to catch the next move? What's lagging behind the others, etc. But you've been really impressive, publicly in our conversations, privately as well, with following almost the bigger themes and narratives. With like, where's capital rotating? What's kind of the next play? Looking at kind of months and weeks more so than the next breakout. Has that been on your mind? Could you give us just a bit of a preview as to the framework you're employing or how you're viewing where we are?
Yeah, and honestly, it doesn't take a lot from a charts perspective, so we can open up charts in a bit. But I'm glad you asked me that because I want to talk about more of the cyclical nature and the seasonality of the markets. And that was probably the biggest bet that I made in ever. Let's just say ever. Once I kind of figured out DeFi, and I was late in the summer of 2020, things were running pretty hot on kind of the early adopter spectrum, but most people didn't know what it was. You and I talked about that, I think in October, something like that. I don't know. And that started to peter out. Some interesting parallels when gas was like super expensive, quality of projects were super low. People were just chasing anything. We're not there right now, but people just got kind of forced out. The liquidity bled away, and in particular, Bitcoin was breaking out after something like 60 days in consolidation. After maybe fighting it a little bit, trying to make sure, hey, this is done or not, I was like, all right, time to let Bitcoin do its thing, and socked Bitcoin away, just kind of let it be. And then I played any alts after that if I was attempting to do something. I don't know how many times I tried to long ETH from like $500 breakout or $600 break. Like it was so difficult to catch those moves. I would always do it with Bitcoin collateral on like a margin trade with like Kraken for US investors, or have WBTC deposited into Aave or Compound and borrow USD and maybe try to make an altcoin trade. More likely just do some like farming plays, because obviously that type of leverage, you have to repay it if you lose some of that USD. So if it's not a winning trade, then you don't want to do it. And that was basically the only alt exposure I had through that period, because I was respecting the fact that it was Bitcoin's turn. My thesis developed in late November based on the strength of Bitcoin's move, and then really was being embedded into my mind about what I thought the investor sentiment would be, was that by mid-December or so, I was like, man, January is just gonna be insane for alts, because what are the things playing on people here? Like, we're all watching Bitcoin go from 10K to 40K, or at the time maybe like 30K.
Yeah.
Everybody's like crazy excited about that. Meanwhile, the mean reversion on the dollar pairs and the total rectage against the Bitcoin pairs for Ethereum even, but also all those hyped up DeFi coins from the summer, some of which had real products. I was literally using one of the products to hold Bitcoin, and I was just like, money's going to flow back into this, and it's going to happen, but it's going to wait till January. Like, the amount of money that you have to realize as a gain, and I know it's different for different countries, but Americans, you have to realize, if you realize a gain before January 1st, you're basically going to owe those taxes by April or by September for the tax extension. Well, if you wait until January 1st, which is what I did, then you delay it a whole nother year. So instead of a 4 or 8 month window, depending on when you file taxes, you actually have more like a 16 or a 20 month window before you have to pay those taxes. And there's no guarantee that you were going to beat Bitcoin anyway, because it was hyper trending. So it's like, I'm just going to sit on my hands. But January 1st, I'm going to really be paying attention to altcoins. I think it's going to be the catalyst for Altseason. Bitcoin didn't like top, December 30th, December 31st. It kept going in January at the beginning. And in some ways that thesis was put to the test, but we also had like age-old signs, right? Like the Doge pump of 100% on January 1st. And, like, I'm traveling to visit with my in-laws, and I'm like, oh my gosh, like I was like, I even said I need to be like all in Doge January 1st, like 15 sats. I just missed a double up like on day one of my prediction for Altseason. Most people just weren't believers yet, even at that point. And, to me, that was like the final confirmation. Like, good gracious, Crypto Jack. Shout out to Crypto Jack. I talked to him, and he was like, "Man, every single time, January. I don't remember exactly what the correlation was. Like January 1st or like a BTC high. It's like Doge always goes crazy right after Bitcoin like caps out on these highs." And he kind of helped confirm that it was Doge somehow was going to find a way to lead again, despite being just. It went down to like maybe 12, 13 sats. Like. The duck got filled down there, right?
Gosh, don't bring up Doge with him. His big play, he got filled there, sold it for a bounce, and then he got like a very, very partial fill at 22, I think, which is a level he'd been watching for literally months. I think he got 5% of his fill before it went vertical. He wasn't exactly happy with a partial fill, but that's life. Neither
was I, because I wasn't patient enough for the things that I was doing. For a while, I was putting any margin profit just into Doge, so I was like, whatever, if it gets wrecked against Bitcoin, it's just profit from another trade. And I didn't follow the plan, man. I didn't follow the plan. I missed the first 100% bounce. And honestly, that one faded, and it didn't have the super Doge, the macro Doge move until, Wall Street Bets and Elon Musk took over. But still, it was plenty for me to be like, okay, this is it. And my broader idea was that Doge and the same old tired stuff is not going to be it. We're going to rehash the DeFi stuff, but we have to have a flippening of market caps with what's in the top 20 right now and what needs to be in the top 20. It was very clear from those of us paying attention that what needed to be in the top 20 was the synthetics and the Aave and the Uni types. Well, now we're seeing that, right? Like we're seeing, in my mind, the rightful places being taken by DeFi blue chips. They may have a little further to go, but now we're visiting the rotation. And some point in that move, like I don't know when it was, maybe when they broke all-time highs, that's when a lot more people started piling in and saying it's time. And of course, by that time, I'm like trying to figure out what's the next trade. Maybe I'm, too early, too often, but it's a little scary to me. If like sushi's great, I love sushi. I don't know where it is on the market cap right this moment, but sushi was like 80 cents and $8 was the moon, and then it went to 16.
Yeah,
it broke. Like it went to $8 the first time when it had that crazy summer farming pump that was insane with massive inflation, and that's why it lost 90%. Is as that kind of inflation kind of worked its way out of the market. And then they developed a bunch of products and became real and became a legitimate uni competitor and had interesting tokenomics and great liquidity and deserved to catch up to uni. So it did. In a lot of ways, it did. But when it's $16, like after it doubled beyond that all-time high from the summer, and it's just vertical. It's just vertical on that chart. It's like I like sushi, but I cannot be in sushi right now. Not when the drawdown potential is like 50% in 2 days is the type of thing that could happen if the market goes down. I'd rather rotate to things that have more fundamental room to move if you do that same market cap comparison. So what we've seen so far is the blue chips, and I would put sushi at the lower tier market cap of those blue chips. But synthetics, mooned. Uni, mooned. Aave, mooned. I mean, I was talking about Aave. It was kind of scary buying it like $90. And I was like, I think this thing's going to go to all-time highs. I think it's going to go to the 4.618 fib extension, which is absurd. And then it literally just ran the fibs. Like we're just running the fibs on all of these. And as soon as you see it happen on a couple, the ones behind it, as long as they have the same kind of justification fundamentally for where they should be, the flippening not only of the top 20, but the top 100, that's where we are now. We're saying like, okay, there's some stuff that's like, I mean, we still have BSV and who knows what else like in this top 100. There's lots of good DeFi projects where all the momentum is, all the money is, but they're still kind of in this accumulation initial markup, but before, whatever you call the technical term, cred, like that huge thrust, right?
Sure.
That sends it. And that's where I've essentially moved my attention, is to say like, where are those projects? What do those look like? And they're not already 10x off the bottom. Maybe they're 2x off the bottom or 3x off the bottom, but they still have this mispricing. And that's kind of where I tried to turn my attention to. And every time you're doing this rotation, it gets a little harder, and it's a little more likely that we're just due for another couple days of wreckage, or maybe Bitcoin takes over and pops like 15% one day, and all our alts lose 10%, and you just lost 25% relative to Bitcoin, that kind of thing. So, that's kind of my summary of where we are, for and sure. All eyes have to be on the Ethereum starting to mark up off its all-time highs. Mm-hmm. A huge deal, whether that carries other alts with it. And then secondarily, what happens with this Bitcoin consolidation? Is it going to be real quick? Like if you look on a weekly scale, it's pretty quick. Or is it going to keep taking its time? And whether that gives us more license to play in the mid caps and maybe even low caps and stuff, or if it's going to mark up because it's, the market's just demanding that it does. And off we go, and hurts those BTC relative pairs in altcoins. So that's what I'm watching for, trying to put myself in a place to have the liquidity that I need to be able to get to ETH, Bitcoin, a blend, whichever one makes sense.
Do you give any weight to the argument that a lot of the DeFi trends have just pretty much been secular, right? So not reliant on Bitcoin behaving in a very kind of tightly defined way. Same with Ethereum. It seems like for a lot of these DeFi projects, on my DeFi watch list at least, for a very long time, even when there was uncertainty as to Bitcoin, when we kept basically dying towards 30k, market looked really rough, etc. ETH was really struggling to break all-time high, or just failing at that level 3-4 times. like scenarios which would ordinarily, I think, make people a bit more cautious with altcoins, because it looked like you were going to get a big candle on either Bitcoin or ETH in either direction. Wasn't terribly clear, but a lot of this stuff just kept going, right? That's what made it so attractive to trade for a lot of time, is because these trends were almost secular. How do you view that relationship? Do you give any weight to that argument that the flows are almost DeFi specific, therefore the correlations are slightly less important than they would ordinarily be?
Yeah, I think that's a good way to put it. And they were secular to a degree. When it got, if Bitcoin goes down 3, 4, 5%, it's like, okay. But that day, Bitcoin went down, 10, 12% to the bottom, like January 21st. I mean, that obliterated alts for a day. Mm-hmm. The difference was you wake up in the morning and they're basically back to where they were. So it just created this huge buy on dip opportunity for people that were rightfully getting a little cautious as Bitcoin was nearing a point of decision. It had that meme-ish low time frame triangle pattern thing going into January 21st. It broke down from it. And when it broke down from it, honestly, whichever way it was going to break, alts were probably going to lose relative to Bitcoin. Mm-hmm. But it broke down. So they lost relative to Bitcoin. They lost relative to the dollar. They just got smoked. As soon as people were like, okay, there is a lot of buying at 30K, then everybody got pretty darn interested in getting right back into those same DeFi coins and stuff that they were before. So Bitcoin still has very much the ability to ruin the party in one way or the other. But my broader thesis is that, yes, it is more secular, and therefore it gives us an opportunity to feel confident buying those dips back. And I can share some of this too.
Sure.
I don't know if can you see my screen properly?
We've got you. Thank you.
Great. So yeah, this was where that consolidated. So alts got killed on this candle. That's the most money I've ever lost in my life, but it was after making the most money I'd ever made in my life. And then one day later, you wake up in the morning and it retraced half that candle. And then from here, everything just kept going up by multiples. And then we got another little one. It didn't get affected near as much on this one because there's more confirmation at that time that essentially there's buying, right? Plenty of buyers down there. And then all this stuff was just what the hype that we've seen. So the question is now on the macro, and Cred, your viewers are going to look at this and be like, hey man, this is a lot different than the Cred charts that I see with all these fancy market structures and stuff. I'm getting very loom linesy on this stuff because I just want to see where are the potential impulses this, and then the fade of it. Mm-hmm. That to me was a huge sign of we're just going to chop around. The market was not interested in moving higher because after the impulse that we had, this is 20K, but honestly, look what we did, from friggin', and we don't have to look at DeFi charts for this, right? This back here is kind of where the distribution happened in DeFi last time. And here is the confirmation of, okay, it's Bitcoin's turn. So this killed all those DeFi pairs and this mooned all those DeFi pairs. Mm-hmm. So the question is, how long is this going to consolidate again? If it does this, that was DeFi summer. This whole, honestly, before that starting here, starting in really May, all of this was DeFi summer. So how long can we go again? I draw this all the way to May purely as an exercise. I think that would actually be a really feisty period of consolidation, but it is possible, especially when you look to the weekly. Can we just chad straight up? Yes, but that's hardly consolidation on Bitcoin, don't you think?
Yeah, I think that case is made most persuasive on the weekly time frame, if any, right?
Yeah.
We're kind of just at the top of the consolidation, no matter how if you just take the first swing we made before the red candle on the weekly or whatever, it's just kind of, if you had to draw a range out of the highest close and the lowest close, for example, this would just still be range bound technically.
Yeah, and there are times where alts and BTC can go together. 2017, there were parts of this cycle where that occurred, maybe 2 or 3 weeks of it. So maybe we do make all-time highs, but it's not we don't go to 50K immediately.
Right.
And if it's that kind of controlled grind up, then maybe alts keep running. But there will be a time where Bitcoin gets too hard to ignore or something, and we alts lose it. Now looking at this same extension with my little red squiggles, ignoring all the other crap, that would look very reasonable on a weekly time frame. Literally no new high in Q1, which was what I tweeted with my altcoin season starting now. Bitcoin top is in at 42K, which turned out to be true for January, which I qualified it right after. I was like, okay, my euphoria here might have been out of control saying Q1, but you can picture this on the weekly chart being very reasonable. That it could be Q1. It could be the Q1 high. It could take all of Q1 for Bitcoin to consolidate enough. And I would like that, not only because I'm, screwing around with altcoins, but this would make so much more fun of a Bitcoin move that the next Bitcoin move could legitimately be 40K to 100K in 2 weeks or 3 weeks or 4 weeks. And there's no more outstanding way to get the whole world talking about you again and drawing in even more money than watching Bitcoin go to six figures the first month of Q2 or something like that,
Mm-hmm.
And do you want to be in altcoins when Bitcoin's going to 100K? Because I sure don't.
No, I can't imagine that being helpful for those conditions. Yeah.
So I want to make my hay now, but be prepared to respect Bitcoin, because Bitcoin deserves and demands respect over and over and over again. So while you're totally right, this is a secular move in DeFi, and it's a secular move that Bitcoin has the opportunity to disrupt pretty much anytime it wants.
I want to ask, and this is kind of on topic, I suppose, given we're looking at Bitcoin. I want to talk about ETH, the USD pair in particular.
Mm-hmm.
This is something we discussed, between ourselves, and something I was discussing with the, via videos and the stream, etc. But, ETH has broken its all-time high, right? We had this multi-week, maybe type of ascending triangle structure, whatever you want to call it, just this uncomfortable. Look, in hindsight, it's obviously comfortable, right? But I'm sure you remember looking at it when it just kept poking all-time high and rejecting. That was anything but comfortable, right? It almost starts fucking with your mind. You're thinking, well, this is such an obvious top, there are no buyers at the all-time high. This should be bullish, but it isn't, right? You get these red candles, but they make higher lows. You're kind of just there waiting. And I took the very complicated trade that I had discussed a million times previously of when the all-time high was broken on a daily close. I bought a lot of spot Ethereum and have been messing around on leverage long stuff kind of in the interim. So that's been...
try to increase that exposure.
Exactly, yeah. So it's funny, I was doing it, I wasn't using inverse futures for ETH, so I just bought a bunch of spot, and then I was trading, and have been trading, the long side with linear futures. So I'd still get paid my P&L in USD, but I'd instantly convert it back to ETH, right? So it ends up being this almost irresponsible model where I've got a lot of spot ETH, and I'm using that spot ETH to long Ethereum, and then when I get paid out in USD having longed ETH, I convert it back to ETH, right? So it's one of those...
You're just a degenerate is all.
Yeah, it's a very degenerate...
You've embraced your inner ape.
It seems I have, but it's been really good. It's been one of my really, really good trading periods, kind of following that all-time high, both from the spot positioning, even though the move doesn't look like much, but also the leverage trades, just the compounding effect. That's been really nice. But with ETH, the sort of... potential cloud that people are paying attention to. Maybe this is like a PTSD symptom. I've seen you discuss it before.
I keep it on the 4-hour chart.
And I know my use of PTSD there probably isn't particularly sensitive, but I'm just a stupid person.
I'm sure our audience is really concerned.
Yeah, I know, right? When we get cancelled in a few years, I'm sure this will be on my high on the list of me being insensitive.
I'm just deleting everything. If we make enough to get out of here, it's all gone.
I mean, as soon as they come after Gainsey, that's when I do my social media wipe.
Yeah, for real.
But people paying attention to ETH USD, I think two things are pertinent. One is I'm just going to be bullish for some time, given the all-time high is broken. Even though the market's just kind of been straight line up since the all-time high break, Donald was kind of poking fun, being like, Cred's a big ETH bull. We had a small pullback yesterday before it made new highs today, and I had people legit trolling me, being like, hey, did you get licked on ETH? It's just this really weird attitude for an asset that just broke its all-time high, right? So that's something that I think maybe a narrative that's understated, underrated, whatever. And the good thing about all-time high breakout trades for me is the invalidation becomes super clear, right? Like it's either full send or it isn't, and you're blatantly wrong. And probabilistically, I quite like that idea. And that's why actually buying the all-time high breakout is such a generally reasonable idea, because that's about as close as you're going to get to invalidation, right? Which is kind of the day or the candle or the structure that broke all-time high generally. But the thing I want to ask you about is CME futures, right? I know it's kind of a self-fulfilling meme, whatever. But, you know, I've got the CME Group website. I just brought it up on the screen. And the futures are coming on February 8th. Which is on Monday, I believe, unless I've got something terribly wrong there. Yeah, that's on Monday. And the reason this is on some people's minds is, well, obviously because of Bitcoin, right? In 2018, I think it was, I don't remember, was it January 1st?
It was the top.
Yeah, so it was literally the top of Bitcoin was the day that Bitcoin futures went live on the CME as well, and, you know, the rest is history. So understandably, some analogies are being made with ETH right now that, you know, it's the same old thing, big rally, everyone's bullish, blah, 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 and then CME launches and we all die. Do you have any learned opinions or just anything you'd like to share on that narrative?
I wish I had some learned opinions. I just have my speculation, and I can discuss that. Fair warning. If I mute myself and I disappear off the camera, it's because my kids, in fact, are not napping. So I may have to let you take the wheel for like 5 minutes and show off some charts while I, you know, go wrangle them. So my personal opinion is that CME will not have an impact on the macro, meaning I'm still going to stay bullish on Ethereum in the long term. I do think it could introduce some significant volatility, mostly as speculators speculate on what the CME speculators will do. I don't think it's going to matter that much. I think there's more power in the native Ethereum market than there is initially in the CME market, but it doesn't prevent it from being a potentially, you know, market shifting narrative. I'm not going to trust the first move, but the type of thing that I could totally see happening would be like, say we do keep kind of moving up here and kind of float up into the 8th and we're 17, 18, 1900. It would be very juicy to do something like that. And, you know, everybody buys into it, but then you look at it on a daily or a weekly chart and it's like, oh, good, we just retested the all-time high and we're freaking bullish as crap, and off we go. That's the type of thing that I think could very much happen. And that would hurt, right? Like that would hurt a lot of people that are speculatively long, or maybe they're risking off going into it, that kind of thing. So that's my baseline thesis, is that we'll probably get some kind of volatility. It would be hilarious if we just went straight up. I don't think we'll stay sideways. I think we will make a decision of like, is this Ethereum, you know, price exploration and breakout, is it going to take longer, or are we just going to go for it? If we go for it, it's the type of thing where we go to $3,000, $4,000, $5,000 real quick. And I would really enjoy that. Like, really enjoy that. I'm not being unintentionally doxxed. My name is Brian Krogsgaard. Hello, I live in Alabama.
How do you not watch his channel? That's like his main intro for all of his videos. Shame on you. Legistatus.com and Legistatus on YouTube. Go watch everything that's on those channels.
Yeah, I appreciate the concern though. It's if I could go back, I would probably not dox, but that's okay. So I, like you, I am just a simple trader, and you look at this and you say, oh, this broke the all-time high. And this ecosystem has a gigantic narrative for why it's important in crypto. And I'm not going to fade that the same way I'm not going to fade $20,000 Bitcoin's all-time high break, because what happened? It went to $40,000 in, how long did it take, Credit? You remember?
Not long enough.
It like a month.
Just feels like a handful of weekly candles. It felt like.
Yeah, it was very fast.
Yeah.
And I don't know why people think that Ethereum will be much different. It's literally a 1 monthly candle to make the high. Like that 1, 2, 3, 4 weeks, 4 weeks, and it doubled. And this is a large asset, you know, like hundreds of billions of dollars are required to make that happen.
Mm-hmm.
Ethereum requires less, has more retail hype, is pretty easy to like put on narrative street, especially with all this like Wall Street bets and Robinhood crap and all that stuff. Like it's not a difficult argument to make. So that's what I'm going to play it as. Like I'm not trying to be a freaking genius. I'm just like, okay, I think this is going to 3K. Is Bitcoin going to start going up in the same time? Maybe that's why it's a grind. I don't know.
ETH BTC looking decent there, isn't it?
Yeah. I mean, I was not joking when I said it looked like a nice retest when it like plummeted a little bit on that previous weekly candle, because weekly close,
I've got the
weekly
same
close,
level, mate. Yeah, 100%.
weekly reject. Like this is a cred type level, right? Like liquidity and die. But then when you breach, then it's a successful retest and you go to the next level. This is, hey, I watched Cred's amazing free videos and I learned about support and resistance.
I've got the same lines.
They're very good.
1-to-1.
It's extraordinarily technical. So let's go to freaking 0.055.
Sure. Yeah. I find it hard to disagree with any of that. If there is significant volatility with CME, etc., like if it nukes, for example, I'll probably want to stand in front of it at some point, because I would just like the structure. Because again, for me, the macro invalidation is price failing at the all-time high. And we know from gold, for example, when it had its all-time high break and failure, that's just a market that's weak. Bitcoin didn't look back. ETH hasn't looked back yet. And so it just generally, I think these trades are much simpler than they seem. If you were to just draw I think my issue is the all-time high seems to attract this kind of magical aura around it where people abandon even their basic kind of technical understanding of levels, right? They always think it's some sort of trap, some sort of stitch up. It has to get retested unlike other levels. And they just start adding all these qualifiers, which don't always belong, in my opinion. It's like in this case, we've broken it and we're going higher. So I'm going to assume, given there's quote unquote no resistance, that until that changes, so the all-time high for some reason, price comes back below it, etc., I think then you're in a great position to make bearish arguments, right? Like that was the excess and it was a trap. This is like a failed Bitcoin breakout just in Ethereum. That would be suggestive of risk appetite in the market more broadly, because why on earth would you sell down an asset that broke its all-time high unless you're really bearish or perhaps know something, right? So until some of that evidence emerges, I'm going to have a hard time being bearish on this instrument. And yeah, if the CME futures wants to nuke it, I'll probably find a place to stand in front of it to catch that dip. One thing I want to ask as well, which is kind of narrative based or whatever, I was on Clubhouse at like 4 a.m. last night, which raises question about my own sanity and how I spend my time. But nonetheless,
I'll agree with that.
So Clubhouse, those who don't know, it's basically like LinkedIn for people with even more inflated CVs and who like the sound of their voice a lot, right? That's more or less, I think, an accurate technical description of what Clubhouse is. Fortunately, a lot of really smart people seem to be using the app in the crypto space. So, for example, FTX does like a daily show and they bring on like Sam Trabucco and Sam himself. They had CMS, Dan on yesterday, which was awesome. And so they were discussing some of just the market generally from like a more trading oriented perspective. And one of the points that was made by Dan and, Sam as well, they were basically discussing Bitcoin and ETH, specifically how the open interest between the two is almost identical, or at least very close, especially by historical levels. But they noted that there's a significant divergence in terms of like order book depth, or quote unquote how much liquidity there is in the market. So like what it would take to push around Bitcoin, for example, versus pushing around ETH, etc. And it almost made this you can basically infer an argument from that if you were to get some real selling pressure in Ethereum, the open interest, it would take less, and the open interest unwind would be larger. I don't know what your views on that are personally. I can kind of see that argument. Like, I don't think it's the case that, okay, open interest is going up and price is going up, therefore it's bearish because like all the noobs are buying. That's not really how open interest works. It's kind of a net positioning thing, which is slightly different. Like you could have, for example, noobs trying to short it, and then the more experienced traders basically opening positions, and then that being reflected in open interest. Yeah. It's just slightly more nuanced, right? But basically, I'm thinking if we get that type of open interest flush in Ethereum, with the market having broken all-time high, I'd be a fan of standing in front of something like that. I don't know what your thoughts are on just this whole OI and price impact argument.
Yeah, I mean, Dan is way smarter than I am on that. and he's great. I mean, I had an opportunity to interview him recently and learned learned a ton.
Yeah,
and
same.
I think that my guess is what you're saying is probably right, because when you blow that open interest out, you're essentially just kind of widening the gap where price can range quickly, right? So you might have to expect that, okay, the price can dump pretty hard, maybe even go all the way back to that all-time high retest. This fits into that same CME, like dump then go type of narrative. You lose a lot, you scare a lot of leverage out of the market, you reduce that open interest a lot, but you also kind of create the gap so that that it can move in the opposite direction, but with fewer players, which is usually how making money works, right? And I think that would make a lot of sense, and it's totally worth standing in for that. The difference is, if you're looking at a BTC relative pair versus USD, that USD all-time high, especially candle closes, like I'd want candle closes to be defended, right? Weekly for certain. Daily, I would not like it if a daily close happened below the all-time high.
Yeah.
And then the BTC pair, the same, that 0.036 or whatever that weekly level is. Mm-hmm. And then we even saw just yesterday, thrust above, one down day of defense on ETH BTC, and today moved back up. Well, that's become another little lower time frame level at 0.043 or so.
Yes.
And I want to be able to trust in those levels and utilize them when I'm standing in front of it, as you mentioned, when there's volatility. So far, and legacy people are really good at this because it very rarely fails. Those of us who've been through crypto bear markets know it can fail a lot. So far, stepping in and buying significant dips, 20%, 30%, are very rewarding, right?
Yeah.
And better yet, if you can manage to limit your overall account volatility, whether it's through a hedge or through being in more liquid instruments that you can exit based on lower time frame hints of what's going to happen on the higher time frames, things like that. And then if you can be prepared to buy that dip based on analyzing the low time frames. This is tricky. You've always given good advice about generally sticking to those higher time frames for targets. And then, but you do like to zoom in on the lower time frames and see well, how do the low time frames respond to those high time frame levels? One of my favorite things I've liked about the way you do TA. If you can use that, you can get lucky and actually have plenty of ammo to buy those dips.
Yeah. And
I would treat everything as derivative of the next thing. So, BTC relative to USD, ETH relative to BTC is derivative, higher beta, going to have a larger move, probably, like Dan talked about. And then your DeFi stuff, your large caps, man, that could be a great opportunity. Oh, great, I took my profits on Aave at $500. I got a 5X, and now I'm chilling in ETH or BTC. And guess what? If Aave dips 40% because Bitcoin dips 15% and ETH dips 20% or something like that, it could be really profitable buying a 40 or 50% Aave dip and catching the rebound wick, like a quick 20, 30% move in 2 days. There's no harm in taking profit and trying to prepare yourself to buy those, whether it's in Ethereum, big cap, DeFi, whatever. But when that moment comes, if you can be prepared to take advantage, then it's very profitable.
Yeah, I mean, I totally agree. That's why I sort of made the argument, well, a twofold argument. One, that excess leverage, especially with altcoins, is an amazing way to get completely wrecked.
I just wouldn't do it. This is not financial advice. It's just human being advice. It's harder to sleep on. It's very dangerous to sleep on any leverage, but especially the baseline leverage on a lot of altcoins of 15-20% that people, or 15-20x that people are using, you're going to get destroyed. And you don't need it. Credit, I've made multiples on my net worth in 50 days with no leverage, none. So why do I want to put that at risk with leverage on altcoins?
I agree.
If you want to put something at risk, do it with a macro move on ETH and BTC, where you have a very clear trade and thesis. That's those breaks above prior highs to price exploration, just like what you were talking about with ETH. I think that's a fine way to use leverage, especially if You're trying to maintain some exposure to other stuff, but you do want full exposure to the ETH breakout, right? Like if you're in some altcoins, you're still kind of dancing around there, but you want to see you want to be able to get the win of the price exploration with ETH. Well, that's what leverage is for, right? Using a portion of your portfolio to get full portfolio exposure. That's my kids using a tape measure in the background. So.
I agree. Yeah, it's also the fact I don't think people necessarily view risk correctly when it comes to leveraged altcoin positions. I think people tend to do a couple things, and I know that I'm not just generalizing. I literally used to do the same thing. One is you almost generalize or think your risk can be isolated per position. So you think, oh, well, I'm long this altcoin, this, like 5 or 6 altcoins, but I'm only risking like 1% each of my account, and therefore, if I lose on one of them, maybe I'll be able to close the other one, or they'll all conveniently stop me out at the same price, and it's just not quite how it works, right? Also, with regard to collateralization, it makes a big difference, especially if you're on platforms, typically linear futures ones, but this applies on inverse futures probably more. Like if you're long Ethereum with Ethereum collateral, and your position goes in the red, and the value, how much margin you've actually put up, starts to decrease as the position goes against you. That's kind of the convexity, if you will, I think, of inverse futures. You get doubly screwed, right? Because as the price moves against you, you have less collateral on the position, and your liquidation price just absolutely shoots up closer to market. Now, you can imagine doing that with several positions of altcoins, all of which you're using Ethereum as collateral for. I mean, you get wrecked incredibly quickly, and all of your like portfolio liquidation just moves up so close. It's really just not worth it.
No, not when you've made I'm getting story after story of people saying like, oh, I've made life-changing gains. Well, I laud it. Don't lose it, know? And there's only a handful of people where I've seen them, like they're experienced people in the market. They're very, very quality traders, right? And they know how to get in and get out and take their loss. Most people are going to say, oh, well, I'm buying that dip and there's no stop loss, right? It's like, well, it works great in up only markets, but when the market turns not up only, it doesn't work so great.
For sure. I think Ledger's attention, of course, is being divided between several important people. But yeah, like the way to view leverage is this whole counterparty risk meme, and it's a cool tool that allows you to create these perfect hedges and speculate with a fraction of your portfolio as opposed to the whole thing to keep several positions running. Also, I guess in the certain context, when the market is just really slow, like you remember trading like Bitcoin futures in like 2018, 2019, you would have like 1% ranges and you get like one candle per day that was actually tradable. And if you missed that one candle, there's like nothing left, right?
I mean, we'd have we'd have like 30-minute candles in a $2 range.
Yeah, I mean, it sounds like a joke, but I distinctly remember at certain points refreshing my trading view because I thought it was frozen. Like I'd look up after a few minutes of looking at something else, the chart hadn't changed, and I thought it was just a glitch, but no, that turns out it was the volatility. So I guess in those cases, you can make an argument. But if these spot altcoins are moving like 30-80% per day, like all over the place, there's no need to exaggerate or exacerbate those moves with leverage, in my opinion. It doesn't matter how big or small your account is, there's really just no need. And again, if you have spot holdings, you can't get liquidated on those, right? You just own them and they either increase in value or decrease in value. Whereas, as I said in my tweet, it's almost impressive, but one of the few ways you can actually lose money while being right in a bull market is actually by employing leverage, and you get wicked out, so to speak, or you get liquidated, or, all these funding payments as well can add up over time, especially on some of these altcoins more recently, like financing those long positions has been getting a bit hot in certain sectors. Yeah. So there's just so many things to look out for that's almost not necessarily worth putting yourself
especially
into.
If your macro thesis is the secular trade that we talked about, right? The repricing of many of these assets to just move up in market cap. Sushi has a great candle on it. I don't have it pulled up, but it's like sometime a third of the way up, it just went down like 40%. I have no idea what it was, but it's like, imagine somebody that lost their life on that, and it's like, look at that thing. I don't know what that was, but like, if you're in spot, you could just wake up and you're fine. Oh, you're fine. Like, well, that was crazy. Well, if you were leveraged through that, you either got stopped out for a massive loss,
Oh,
depending on
oh,
kind of how
you'd
you're
get wiped
structured.
by that. There's no way. I mean, there was literally nothing going on down there.
Yeah,
You'd get
I have no
liquidated
idea
like
what it
here.
was, but
Yeah,
there you have it, right? And it's on Binance, and it was, I guarantee you that was leveraged induced.
for sure. Yeah. So it's just not worth it. It's one of the few kind of vectors which you can be wrong while being right. Very difficult and almost very unnecessary. So I think
Yeah,
that's
for
just,
sure.
and it's also like leverage. For every good story you hear of someone making it via that method, you and I know so many people that kind of lost just so much more, if not everything, via those same exact tools, whether it's using altcoins to long alt USD pairs or after the altcoin market stopped performing as well, just trying to leverage trade Bitcoin, like in the same way that they were trading spot altcoins. Like the history, if you will, of leverage trading generally isn't kind outside of really experienced practitioners, you know?
And even people who are really experienced blow up all the time. He put it on public, so it's one that I can remember. I mean, March was hard. Like I was in spot. I don't even think I was using leverage when that like liquidation cascade happened. But
same.
I remember Loomdart was like honest about saying, "Hey, I took a massive hit on my entire net worth today." Like I think he blew out a margin account, and he's a smart enough guy to not have everything in one margin account, but. Like if Loomdart's getting blown out by something, you can get blown out by something because he's a really fantastic trader, despite his meme lines or whatever else you want to call it. Like he knows what he's doing,
Sure.
and you have a catastrophic event like that where Bitcoin goes down. I don't remember the top to bottom, 50% in a 24-hour period. I mean, anybody can get blown out at any time, and if you're doing it on altcoins, it's almost guaranteed.
Yeah, especially because cross margin has become so popular to use in a lot of these platforms. Even though the collateralization, like for example, FTX, a lot of the charts look at what percentage of volume is kind of made up or comprised of liquidations. So some of these platforms, they're much nicer in terms of allowing you to collateralize properly and not get liquidated. But generally, it almost needs to go wrong once, and that can wipe out a really huge chunk of what you've made. So that people are saying it went stream glitchy. I'm sorry.
Yeah, we're glitching.
Ooh, right. It should be okay in a moment. I think not a whole lot
it's
I
back.
can do.
I see your Chad green candles. Is that today? Are we pumping again?
Let me see. Yeah, just refresh. Apologies for that. I'll make sure to fix it by next stream. One thing I want to ask you about, which is something we've spoken about previously, at least on the other show, is when it comes to Uniswap and DeFi trading, etc. As the gas fee, the average fee, has continued to increase, do you think that there's an argument to be made that a lot of, when it comes to like specifically interacting with smart contracts or like pure DeFi trading, are a lot of participants being priced out of interacting?
I'm being priced out, and I've got a lot in there, right? Relative to
so could you speak
what
on that?
I'm
Like,
worth.
why is it happening? Is it bullish, bearish? Do we have to look at Ethereum like, the optimistic and layer 2 solutions? Like, what's your kind of higher, overview take on gas prices and DeFi and maybe the relationship there?
Yeah. Are you recording, by the way?
No.
Because the stream is on Wednesday markets from February 3rd.
Ah. Okay, I mean, it's green on my side now again. I'm not entirely sure.
Oh, okay. Maybe it's the previous link.
Yeah, maybe.
That's what it is. People have to press back. Yeah. All right. Sorry, I didn't want to interrupt your stream.
No, it's all good.
The chat thinks it's broken, and it went on to the next video.
Too much alpha. We're being censored,
Yeah, we're being censored. We're still on though. I see it. So
it's red again. I think we're gonna be screwed for a while, but let's do our best.
Okay. The Uniswap, Ethereum fees are definitely pricing people out.
Mm-hmm.
I mean, I think I've spent 0.1 to 0.2 ETH to make singular transactions.
Right, okay.
Multiple times. That's a lot of money. I don't care who you are. That's a lot of money, and you have to have enough money in the trade for that to be worthwhile. And I don't know, not a lot of people are saying like, okay, well, my baseline trade is like 10 grand or 20 grand. Just not a lot of people. That's a lot of money. So if you're playing with a couple of Ethereum, you could spend that on a DEX in like a couple of days. So yeah, it's huge. It's definitely pricing us out. Just like it's doing on the stream, you know, we're just getting wrecked on this stream right now. Do you see it? We lost it again.
Yeah, I see it. I'm not sure what the fix is. I think my bitrate keeps dipping, and it just cuts out.
Do you want me to record it locally or something?
I can do it.
Okay.
Gosh, how annoying.
They said the gas is too damn high for the stream. We can't keep the stream up.
Yeah, so it seems.
Is it just? It's probably your bitrate going to YouTube.
Yeah, that's what it is. I can see that being the issue. Yeah, I guess we can sort of more or less go to a rounding up direction while things are okay and finish this topic, not to keep you or the audience for too long.
Yeah, we're still live. We're back live.
Okay, yeah.
Yeah, I see it. We're on. Okay.
I think it's going to go again, honestly. I can just see it turn red now, so it's about to die again.
Yeah.
Well, I'm recording anyway.
Please move your stream to L2.
Yeah, move my stream to L2.
If anyone's still on here though, basically yes, these fees can end the hype cycle on the DEX side of things. And honestly, I want to be primarily in stuff that is also available on a centralized exchange, because I think it'll just bleed out the volume of DEX only stuff, unfortunately.
What's the fix or the solution? Like, is it, because I've seen, for example, some of the stuff's on Coinbase, right? So is there an argument that, like, listen, I don't really care about the DeFi ecosystem or participating, you know, via matcha or interacting with these smart contracts or anything. I'm just going to go on Coinbase or Binance or, you know, a centralized exchange and just buy those DeFi pairs there. I don't care about anything else, and, you know, the Uniswap opportunities, stuff that's not listed on SEX, whatever. I'll get to it later. Is that valid?
Yeah, absolutely. And I think that's actually what caused some of the moves that we've seen, where, you know, your Aves and your Unis are really pumped, but then you kind of go to the DeFi, older DeFi stuff or DeFi adjacent stuff. So that was part of my thesis for ZRX is accessibility. OMG, Omize Go is also kind of DeFi adjacent, I guess, but looked similar to ZRX. And then you got stuff like on other chains that people are going to try to provide similar narratives, like, you know, like Algo or something, or maybe Atom. And yeah, people are just going to move to those trades. Like, people are still going to try to trade it, but it's going to be harder if a large percentage of your buyers are just not there. It's just people with a lot of money selling it back and forth to each other and paying miners boatloads on the dexes. So those have to be a longer term thesis. Like, it's not the type that you just scalp 20%, right? It's like, I have a much bigger concept of what I want out of this trade in that scenario. Yeah,
I think we always tend to run into similar issues either on Bitcoin or Ethereum. Like, when the market gets really hot, you remember in 2017. Oh
yeah, those Bitcoin fees were like 0.01 Bitcoin to transfer anything.
It was unbelievable, honestly. I was doing like a whole security rebrand thing at the time of like actually moving to cold storage and being an adult with my holdings. And that that just wasn't cheap, right? So it's no real surprise that we're seeing it with ETH as well. But I think that can act as a catalyst for innovation, right? I mean, I think it sounds like a cope argument saying, well, the network sucks, but here's why it's good. Like, I understand the irony there, but
bullish clogging,
yeah. But I think, you know, at least in the short term, it's evidence of some sort of demand or the network being in use, and people are still paying those fees to interact with smart contracts and participate. And I also think, given the amount of real money that's in Ethereum and DeFi more broadly, you know, there's going to be some really attractive, I think, kind of space races, if you will, to continue scaling Ethereum for traders and just using the network generally. So
and
I think
it presents other trades. Like, look at what Solana's done, you know, and Serum built on Solana, and some of the narratives. BNB is. It's so big. It's just everything coin, but, you know, BSC is a thing, and people are going to try to make those narratives. And some of them will work, but I generally think Ethereum has network effects that are just too important. It could fail. Like, you have to solve stuff at some point, right? So it could fail. But layer two, this is one of the things I was thinking was layer two on ETH would be adopted 10x faster on the year than layer two on Bitcoin, because on Ethereum, transacting's the point, right? Whereas on Bitcoin, you can trade on centralized exchanges and people don't really care about sending money to each other. They just want to get rich off Bitcoin. Whereas with Ethereum, like you are interacting with all these smart contracts and these different products, it just creates activity on the network. Most of the activity is through Uniswap and DEXs and stuff, but Ethereum has a stronger requirement for scale. And layer two is going to be, in my mind, going back to that cyclical macro trade, is layer two will be our justification for like the next round, like after consolidation, for DeFi stuff to move up again, right? So Bitcoin legs up, and then it's like, oh, look, Bitcoin looks like it's going to consolidate here at $75,000 per Bitcoin. Let's go see what altcoins we can buy. And oh, look, Aave's got layer two support now, and it's not $200 to deposit something to Aave. Let's pump Aave to $1,000. Sure. Like that's our narrative for that round, and they need that. They need layer two. And it's going to be like, oh, there's billions of dollars on layer two now, or EIP, Ethereum Improvement Proposal 1559 for how miner fees work gets implemented. So that's going to be bullish for XYZ, and those things are going to provide significant narratives for the future. But you still have to play it in the context of like what the Bitcoin cycle looks like.
I think the design philosophy of Ethereum seems to be more conducive towards this more experimental and more open-minded towards scaling sort of thing. And I totally understand the argument for Bitcoin as a, the settlement layer having to move very slowly, which is fine, right? The innovation can be quick on layer two, but even then the integration and the acceptance and the adoption will understandably be slower. Whereas I think the Ethereans are much... are willing to move faster, even if imperfectly. And
they're adventurous for sure.
For sure, yeah. That's kind of the VC coin.
And look at all these hacks that they just push under the rug. Like, oh crap, $10 million lost over there.
I want to ask you a final maybe question before my internet completely cuts my head off. And thank you both to you, Brian, and the chat for bearing with these annoying issues. You can almost imagine how annoying it is for me. Anyway, one thing I'm keeping an eye out for, sort of within the macro cycle, I kind of look at micro cycle stuff, and my observation, at least so far, that there's been like the correlation intra DeFi has been very high. So like if it's a DEX, like all the DEXs have been going up, and some people realize that one is kind of arguably lagging behind the other, so they start buying that. I think ZeroX has been ZRX has been a good example, and same with spot lending. Oh, this spot lending platform went up, this one's therefore underpriced. Almost this like cope arbitrage type of trade where you just find like analogous projects and you end up longing them to catch up. So you got spot lending, synthetic lending, DEXs, almost anything you can come up with regard to DeFi. It's all been very strongly correlated, both within that same sector. Do you think as the market matures and as capital starts to maybe move around a little bit, that we'll see correlations break within DeFi, so certain DEXs start to really break away while others underperform, and some spot lending platforms take over versus others? Or is it literally going to be the case until we really establish this part of crypto that everything's going to go up and then everything's going to go down together? Like, do you see those shorter term winners and losers emerging in the near future? Because I don't think it has been at the moment.
Yeah, I think we'll see winners and losers on some of these products, and the pricing will start to represent the usage. Like, where is trading actually happening? Who is pulling in the most fees? And the way we value these things is changing too, because we're starting to get to where it's like, oh, well, there's a protocol that has cash flow, and we can actually use that in terms of market cap and whether that cash flow is brought back to token holders. And, God bless the regulators, but we're going to have better ways of measuring that, better ways of measuring activity, and that'll start to reflect on what's what in terms of how you adjust like the potential market cap of something, or how you consider just various elements of that valuation. When you're looking at total value locked or fully diluted value or circulating supplies, and it'll be clear like, oh, well, Aave is like used 10 times more than Cream. So they're both lenders, but obviously one is 10 times more valuable. And the tokenomics are better too while you're at it. So it's like that That'll help a lot in terms of deciphering between them, but that's not really where we are right now.
No.
It's more like, okay, this one's lagging. It's kind of similar to the other one, so pump it.
And it's a good market to be in as a result, right?
Sure. As a speculator, it's great.
Yeah, I look forward to seeing how that develops over time. I think Sushi's redemption arc has been one of the coolest stories that we've had in DeFi from this kind of vampire.
That was deservingly so. It was just too small. And what you saw is chart patterns be damned. It was number go up because it was clearly mispriced. Like the liquidity that they have on the platform, the volume that they have on the platform, the stuff that's being built, the tokenomics of actually having a plan for sending cash flow back to token holders. Can you really imagine Uni, a US based team, figuring out a way to put cash flow back into holders' hands? It's a lot harder. And so Sushi's getting paid for it. It's still not catching up to Uni fully, but honestly, I think you could say a Sushi token holder is going to make more money than a Uni token holder over the next 5 years.
Yeah. I mean, that's almost completely kind of juxtaposed models, right? One is the VC, very professional, very strictly developed and audited code, etc. And then Sushi's more kind of grassroots, has this crazy...
Go for it.
Yeah, for sure. It's just the contrast between projects, right? Both are going up, but then they're on the complete opposite ends of the spectrum when it comes to...
Yeah, I think Uni is like Coinbase and Sushi is like Binance. And both are huge, both are juggernauts, but, Binance kind of won, right? So maybe Sushi will...
Yeah, so I think that'll be interesting to see what changes within DeFi, but at the moment, as you mentioned, these are concerns almost for the future, as opposed to right now in this cycle. Right, well that's, again, Brian, to you and to the stream, apologies for the internet issues, I'll be sure to try to fix them.
Oh, it's fine, man.
So we can get a longer, higher quality session in as well. Do you have any parting words, wisdom? Where can people find you, read you, hear more of you?
Definitely don't put me on notifications on Twitter because I'm constantly answering questions and stuff. So that's not a good idea. I've seen some people saying they're doing that. They're crazy. But you can follow at LedgerStatus, and LedgerStatus.com is kind of the hub of everything, or the YouTube channel for LedgerStatus. Got a podcast I'm doing with Josh. Just started a thing with Kobe, the Ledger and Kobe live streams, which are fun. Awesome. So we're just pumping out content, trying to share everything we're doing while we, try to play this market. Be safe, don't be afraid to pay yourself. Do not be afraid to go back into Bitcoin and Ethereum and, feel some FOMO if you miss the last little bit, but you'll be better protected when this inevitably has a big market correction and maybe you lose 10% where you would have lost 50% if you stayed where you were. And it'll just give you ammo to buy the dump. Up only is great. You look on the large time scales, it does look like up only, but you zoom in a little bit and there's some big wicks down. Those are very natural after you go up 100% or 500% or whatever. So don't freak out. Buy the dips and play the macro cycle.
I think that's great advice. And yeah, there's no worse position to be left in other than cashless if the market chooses to pull back. Because then you feel bad because you sort of feel overexposed, but then you can't even do anything about it in terms of building a new position or averaging in because you're out of money. And just in terms of those...
you're just sitting there as a bag holder fully in after 30% down. You can't do anything.
And you tweet buying the dip, but then at that point you're fully deployed, so you can't do it anyway, right?
Buy the dip. I just did it with 1% that I had left. But now I can't afford anything because that was supposed to be my gas fees.
I found some dust and now I can't move any of my ETH, that kind of thing. And also just worth bearing in mind, people will always, on Twitter at least, they'll tell you to take profits after the market has dumped for the most part. So if you're waiting for that type of signal from the talking wisdom collective, I don't know, guru,
it triggers me the most, man. That's why I said I'm happy to start saying it now. Just start taking profit right now. Take 10% off for every day. I bet that's going to work well for you if you do it. Sure. I cannot imagine we're more than a couple of weeks away from something severe on the downside. And if you're sending 10% out every day for 10 days, then maybe if we hadn't done it after 5 days, maybe move some of those to stables even. How dare you? You're going to be very well prepared to buy a nice big dump though if that happens, and you're probably going to be happy for it. They happen in the strongest of markets.
Agreed.
Don't feel like an idiot because something goes another 20% after you get out. You got your You got your bag of victory, and you're gonna control your, what's that called? Cred. There's a fancy word for it.
Control your.
It's like how you measure a trader, like the level of volatility in their gains. I can't think of it right now.
Is it those fancy finance ratio things? Is that kind of what you're?
Yeah. It's one of those fancy finance.
Okay.
It's an imperfect ratio, but like that's what you're improving, right?
Yeah.
Like you're preventing the big drawdowns. You're not just at the whims of the market. You're kind of in control.
Yeah.
And you're still going to have exposure to probably to like at least Bitcoin. And Bitcoin's not going to lose near as much as what everything else will when that dump happens. So
fantastic. Well, again, thank you very much, man.
Sharp ratio. Thank you.
Sharp ratio. I was almost there, right? It's always nice to catch up.
There's another one too that's apparently better, but none of these are great. But like your Sharp ratio will be better if you're avoiding that downside volatility.
I'm not in a position to disagree. So thanks again, Ledger. It's always nice to catch up. I'm sure we'll be talking
buddy. Anytime.
And soon.
I need to have you on our stuff.
Turn it into a Clubhouse style circle jerk, right? When it's all the same people coming on each other's podcasts, just this in this old boys club loop. Why not? I'd love to.
Hey, with our ones with Kobe, we've had female guests on.
That's been quite
both
diverse.
The first two episodes.
Yeah, and then immediately she gets cancelled by the witchers on Twitter, which is its own insane topic. You see like Kobe tweeting at 5 a.m, being like, "Why are they trying to cancel this vegan girl?" I don't know. It's a weird spot, but I'd love to. On my end, that's kind of all I've got. Thank you, of course, to the show's sponsor, which is Bybit. I know it's funny, we spent like half the thing talking about leverage, and then, thanks Bybit for sponsoring, but being responsible never hurt anyone.
They don't want their customers to get blown out.
Well, exactly. Exactly.
You want to use leverage for power, not leverage to get wrecked.
Yeah, leverage for leverage, right?
Yeah.
Cool, that's all I've got. Thank you for bearing with the technical issues. I'll be sure to do my best, whatever I can, to fix it for next time. Make sure to follow Brian literally everywhere, because he's a content machine. I will see you for Monday Markets for hopefully a cleaner stream. Brian, thank you. Audience, thank you, and have a nice weekend.
See you, bye.